So we are back with another video talking about candlesticks. You might have known this is a series on this channel. We talk about new candlestick patterns. We explain what they mean, how they are used in the real market, and what they do to the price movement. So we are back with another video. In this video, we're going to be talking about bullish and bearish engulfing patterns. We'll be going over how they look like, what they mean, what their candlesticks look like, and what they do to the price movement. So without wasting any more time, let's get right into the video. Before we do start, do make sure to hit the thumbs up button, drop a comment down below, and also don't forget to subscribe to our channel for more upcoming videos like this. So let's get right into the video and let's head over to our screen. So we are currently over at our screen and I am on an article by IG.com. And we are looking at a bullish engulfing pattern first. So that's what we are seeing. And let's just talk about what it, let's just read through this. The bullish engulfing pattern is formed of two candlesticks. The first candlestick is a short red body that is completely engulfed by a larger green candle. Now, what does it mean by engulfed? That means that this big candle could eat up this red candle, so this smaller candle could fit inside this candle on the right. That's what technically engulfed is supposed to mean. So throughout the second day, though the second day opens lower than the first, the bullish market pushes the price up, culminating in an obvious win for buyers. So that's what basically we see right here. Potential direction, we see our smaller red candle here. We see the mid upper shadow and the mid lower shadow and a decent fair body, and we see the same thing again but with a bigger body. That's what identifies as a bullish engulfing pattern. And that's how we can tell that this is a bullish engulfing pattern. Even if we look up this bullish engulfing pattern, we can see that on Google, this basically means that we can see this smaller candle is a red candle, which is technically a bearish candle. So the open price, it goes to the close, and then there's a gap between the close and the open again. So it opens right here, goes up to new highs, changing the direction of the overall market. So that's what basically a bullish engulfing candle looks like on a chart. So let's give you guys a real life example. So this is our bullish engulfing. As you can see, the smaller red candle here, the bigger green candle, and then we enter when the candle ends, and then obviously we go on to hit our target. So that's what basically a bullish engulfing candle is and what it does. So now let's move on to a bearish engulfing pattern. So I think it was right here. So this is basically almost the same thing, except the some things are reversed. So what are those? And let's go over what those things are. So a bearish engulfing pattern occurs at the end of an uptrend. The first candle has a small green body that is engulfed by a subsequent long red candle. It signifies a peak or slowdown of price movement and is a sign of impending market downtrend. The lower the second candle goes, the more significant the trend is likely to be. So if we just take a look at this visual representation right here, we can see we are currently in an uptrend. We see the smaller green candle here, so the smaller green candle, and we see a bigger red candle on the right side, meaning that the trend is likely going to be reversed, and that's what we're going to see in the upcoming times. And most likely that the bigger this candle is, as said in the upper paragraph, the bigger the second candle is, the more significant the market reversal is going to be. So we can expect even a higher downtrend if the candle was bigger. So that's what basically a bearish and bullish engulfing patterns are. Basically the same thing, as they're just basically reversed. The roles are reversed and the market direction is reversed. but they technically do look kind of similar and play almost the same role in the market. So that was about it for this video, guys. If you did enjoy this video, we have a series on these candlestick patterns. I will be putting them in a playlist. We did part 1, 2 before, and this is currently part 3. We talked about bearish and bullish engulfing patterns, so we went over what they mean, how they affect the price, and what their difference is. So thank you guys so much for watching. If you are new to this channel, do make sure to check out my daily live streams I do on this channel. Talk about any recent crypto news that has happened, any recent price changes. So we do talk about the overall market in those live streams daily, so do make sure to tune in. And I also create long informative content like this one. We create regular videos about new trending cryptocurrencies, any information about the cryptocurrency, so do make sure to check these videos out also. So if you did enjoy this video, click the thumbs up button, drop a comment down below on what other content you guys want to see, and also don't forget to subscribe to our channel. So thank you guys so much for watching, and see you in the next one.